How's it going, fellow traders? It's Magic Trader here. It's a little bit late for me to be posting a video. It's actually Wednesday morning. Just been extremely busy on my end here and trying to get a video done before I get a bunch of family members coming over to my house for the next week or so. So, thought I'd get this video done first thing in the morning and post an update to the latest CFTC report that was posted, or I should say reported, on July 18, 2017. So here's my report, and here is an outlook of what the data was showing us. Alright, and here we go. Let's start with the gold. So what do we see with gold? So institutions haven't been doing anything with their longs, okay? And shorts have pretty much done nothing. Still, shorts are aggressive. The coloration of the cells here, even though 58% of the overall exposure is geared to the long side, the cells are colored red, which is pretty much a bearish sign. And that happened as we had this candle here rallying from tested weekly demand. So net positions are still positive, a positive 60,000. So I'm still looking to get in long on this one. I'm just waiting for this area of weekly supply to get removed, and then I'll take positions to the upside. Alright, next one, we have oil. What does oil show us? Oil shows us that the institutions are adding long time. Long. They're loving the longs here on oil. 629,000 up to 652,000. And as that happens, shorts drop significantly from 270,000 positions to 255,000 positions. What's the net effect? Long exposure jumps up 2 points, and net positions jumps up pretty dramatically from 358k to 396k, and that happens as we had this rally here. So I had a setup down here that allowed this to get triggered. Did not take it simply because we had this 20 EMA, we had this trend line here, so the upside potential is limited. I'm waiting for that trend line to get out of the way, and then I'll look for trades here upwards. So long bias remains. They kicked it up a notch this past week by adding even more serious longs, so I'm definitely interested in getting long on oil. Just waiting for that to get out of the way for me. Alright, so US dollar longs remain very cooled off, shorts remain aggressive. Overall bias is bearish, even though long exposure is 52%. Still bearish considering what positions used to be at. Okay. Right here, this area is tested. I'm hoping for a move like this. If I do get that move, I'll be going short here and riding this sucker down like that. So no monthly demand, as we pointed out last week or two. No monthly demand, so price can easily drop down here where we have a confluence of a 3-month trend line and a monthly demand zone right here. In fact, I think that that monthly demand zone removed something, right? Let's check. Yes, that monthly demand zone removed the 3-month area of supply. So very high odds that even though no, let me see here. Yeah, 3-month trend line this way, right here. Yeah, so this is perfect. So we're in a 3-month uptrend. This move is just perfect. Boom. Like that. That's what I'm suspecting is going to happen. Alrighty, so it looks like the institutions are planning for that as well with this massive shift. And I think there's going to be more of a shift happening soon, because I'm thinking this is going to become a lot more aggressive. higher numbers. Okay, so let's take a look at the Aussie US dollar. Longs for the first week becoming aggressive. Shorts have been cooled off for the last few weeks. Long exposure jumps up 5% from 75 to 80%, and net positions jumps significantly from a positive 36K to a positive 51K. So I'm looking for the retrace down to here, the weekly demand, and then take positions to the upside. So July, just beginning of July, we see the increase. July 18, doom. So there's definitely demand here that I'd be interested in. Okay, USCAD. This one's a bit tricky because we have a tested area of monthly demand here, which we expect to get a deeper penetration of. Oops, just like this. And then I'm expecting a move to the upside here. Just based on technicals, we're hitting a 3-month demand zone that removed the 6-month supply zone, so I don't think that this zone is going to be taken out by simply reacting from a monthly supply. Longs are neutral territory, shorts are being put on aggressively, and that raises the short exposure up to 54%. So net positions are now a negative 8,000, but colorations of the cells are just slightly red, so slightly bearish, more still in the neutral territory, which is a good sign because we don't want to go short when we're sitting in demand. So I'm thinking that this area here will be taken out. And let's take a look at the chart here so we can get a better idea. Yeah, we're getting the reaction now because we're sitting inside this demand zone that's fresh, so expected reaction. But yeah, on the weekly chart I'm expecting this zone to be removed here and a deeper penetration to this zone, and I think here is where we're going to get the move upwards. Okay, and let's go to the next one. So overall bias is neutral, don't do anything. Next one is US Swiss. What do we see? Long exposure gets very neutralized. It's neutralized but climbing out of the neutral territory with from 10 to 17,000 in positions. And shorts also went up from 10,000 to 13,000 positions. Net effect, neutral. 56% of the overall exposure is long, but basically the cells are telling us to be neutral, which is a good sign. We're just about to hit this area of monthly demand, so I really don't want to be taking any shorts up in this area. So waiting for the US dollar to react. Once the US dollar reacts, then I'll be looking for positions here. Euro. This one's an interesting one. They increased longs from 190K to 199,000. Shorts also increase, but the overall effect is that long exposure jumps up 1 point from 64 to 65%, and net positions climb up from 83K to 91K. We have this area where I'm interested in taking longs, just like that. But if you take a look, we got a similar situation here on the chart. Take a look here on the monthly. Right here, we got a 3-month trend line down here, like this. 3-month trend line. We got this zone, monthly zone, that removed the 3-month demand zone. So, boom, and then down is what I'm expecting to see on this chart. Alright, let's go to the next one. We have the pound US dollar, and the pound US dollar shows us that longs are increasing from 46,000 to 50,000, and shorts decreasing from 70 to 67. So shorts becoming cooled off, long starting to build up. We still have this area that we have to deal with, a monthly poorly formed supply zone, but still waiting for that area to get out. I'd be interested in taking trades off this area of demand with a confirmation type of trade. Otherwise, this area never consolidated away, so that's out of the question. So it's either longs here or longs after we break out of here. But then we have this trend line to contend with. So we got 20 EMA trend line. So this is kind of a tricky chart. Not doing anything on this one right now. Let's see. We got the US dollar Japanese yen. Longs increasing from 152 to 164. Shorts decreasing, becoming even more cooled off. Long exposure jumps up 2 points to 81%. Net positions climb up from 112,000 to 126,000. And that happens as we react from this tested area here. And now we're hitting this demand area. So not taking any long positions. I don't see any decent setups on here. So although the institutions are heavily long biased, I'm not taking any trades on this pair. The Kiwi, longs remain aggressive. Shorts become even more cooled off. Long exposure massively jumps up from 77% to 84%. Net positions increase from 31,000 to 35,000. I was talking to a fellow community member who was saying, well, should we trade the Kiwi as being strong since we're getting these strong numbers here? Well, let's not forget that we have a weekly or a 3-month area of supply that removed a 6-month area of demand right here. We had it touched here, and we can get just a deeper penetration, but this zone is not going to be removed as far as I see from the technical standpoint. This zone is not going to be removed. So deeper penetration as price moves up, like this big aggressiveness is what's causing these numbers here, right? So I wouldn't be too excited about that because we do have massive supply right in the way. So I'm going to be waiting for the demand to cut out, for supply to kick back in, and then I'll look for confirmation trades to ride this one down because that's where I think this one is heading. Alright, so that's pretty much it. If you look at the report, you'll see that the only piece of volatility we have is today with the US dollar rate being released. So that's what we got, ladies and gentlemen. I hope you guys are having a good week trading out there. It's been a little bit slow this week. Hopefully it'll pick up after today's news. Alright, hope you have a good one. Enjoy your trading week. Bye.